Welcome back to Breakfast Central on a Thursday morning. Next, we're unpacking a national dilemma that's quietly becoming a fiscal emergency. Nigeria's public debt has surged past 149 trillion naira. I'll repeat that. Nigeria's public debt has surged past 149 trillion naira. Yet, many experts say the outcomes on the ground don't justify the borrowing. Also, the former House of Representatives member Nicholas Ossai has warned that the National Assembly risks reducing itself to a rubber stamp institution unless it asserts its constitutional mandate in scrutinizing loan agreements.
Well, his remarks came a day after the Speaker of the House, Abbas Tajuddin, raised alarm that the country's total public debt has climbed to about 149 trillion naira, warning of the dangers of excessive borrowing, even though there was also another report that he did take back that statement. But, I mean, it's said already. Joining us for this discussion is financial analyst Kalu Aja, who joins us right away. Thank you so much. This is one very, very pertinent conversation to have. Most importantly, to look into it as Nigerians are indeed starting to wonder, what are we really borrowing for? The last time you were here on this show, I recall I asked one question and you answered. And the question was, do we need to borrow? And you said, yes, we're not even borrowing enough. But it's looking somehow right now. So let me start by saying that now that the debt profile has ballooned to 149 trillion naira, do you think that we can rightly say as Nigerians convincingly that the borrowing is actually doing the work for us with what's on ground?
Yeah, that's a good intro question. I think the problem, like you highlighted, is that Nigerians need to see where the money is going to. They need to see the effect of the borrowing, the roads, the trains. Then they'll be like, yes, the borrowings are high, but I can see the effects of the borrowing, or the cost of the borrowing, I can see it. And I think that's what the problem is, the trust deficit in Nigeria, where we see the 149 or so trillion, you mentioned something like $97 billion. But then the roads are bad, the ports are bad, there's no power and all that, no insecurity. So that disconnect is why you have those conversations where folks talk about where we're borrowed. Like I said, the economy of Nigeria needs a ton of borrowing. You need to borrow to invest in infrastructure that wasn't done for years, right? We need to build out infrastructure, we need to create jobs, we need to boost productivity, and we can't do that from just the earnings that we make. We have to get in more funds from remittances, from borrowings, long-term borrowings at very, very low interest rate. That's what we need to do. If productivity goes up, then the economy can create tax revenues and then we can pay back. So that's where we are right
now. Kalu, you know, you said people need to see what these borrowings have been used for, but this administration is just in the second year. You look at a project like the Lagos-Calabar Superhighway, for example, it's going to take about 7 years to complete, and infrastructure projects do take time. The Ethiopians just commissioned their Grand Ethiopian Renaissance Dam. That took a number of years. So in putting this in perspective, how would you address Nigerians? Or would you say, because like, you also mentioned the trust deficit issue. People are saying, look, we can't see anything, but sometimes these things take time. So how do you balance that?
Yeah, you have to have a strategy of rolling out infrastructure, right? You talked about the Ethiopian dam. This is a massive 13-year project, but you could see them clean out the land, pouring the cement in there. People could see that there was something big happening. If you come to Nigeria, we're building out the coastal road, right? But we do have roads internal that are very, very bad. And if roads are bad, that makes the cost of food go up. That makes inflation go up. So I think the strategy should have been in the first 6 months, you fix all the roads that people can see that we use every day, the roads that we use to take food from Kebbi to Lagos, from Maiduguri to Enugu. Fix those ones, right? Then do the coastal road. So that way you bought some trust. You said, listen, we are fixing this, but we have to go do the coastal road because it powers the economy. It's going to be an east to west road. It will open up the country for commerce. But if you do the quick wins that are very, very easy, then you can go do those major ones. That east-west road, the coastal road, that's a 20-year project. No, not a 7-year project. It's going to be a long-term project. So you need to carry people along and say, trust us, we're going to deliver this. The same with the rails, the same with power. You've got to have quick wins. People see that, then people can be on your side and allow you to then do those longer term infrastructure projects. Yeah.
All right. So it seems like Nigerians are starting to talk more, especially after this information did come out just a few hours, a few days ago, rather. Looking at the debt profile, 149 trillion, in comparison to previous presidents and what they've borrowed, where Nigeria is, starting from 1999 up until now. And then we do hear that the debt-to-GDP ratio is now 52%. My question to you is, those who are the informal sector, Nigerians and so on, what would be the trickling effect of this?
Yeah, the key number to watch, in my view, is the debt to revenue, not really that debt to GDP. Because what happens is when you have the budget and you have a high debt to revenue, you are taking more of the earnings to pay down debt than you're using to build infrastructure. 2 years ago, 2022, I believe.
Mr. Kalu Aja, okay, go ahead, please.
Yeah, just as I was saying, the number to watch is the debt to revenue, not just the debt to GDP, because you're going to use the revenue that you'd have used to build roads to service the debt. We've come down from about 92% debt to revenue to about 50-something right now, debt to revenue. The more you service the debt, that's money that could have gone to food, to education, to roads, and healthcare for the guy on the street. So right now, the number one or number two cost on our budget is debt service. It's as high as what we spend on salaries. It's more than what we spend on capital infrastructure. And that's the problem. If we can't build the roads and we're servicing the debt, then we get into this debt spiral where we're borrowing more to simply service what we already have. And then that then puts more pressure on the budget, and you see them raising taxes every day. Because borrowing is the same as raising taxes. That's why taxes are going to go up, because we have to service those debts that we've taken because we are borrowing to, pay back the old debt.
Now, if we're borrowing to pay back debts, that means, just to put it simplistically, if 80 kobo out of every 1 naira goes to creditors, what then is left for healthcare, education, infrastructure? Are we running government just to pay lenders? And this is where institutional oversight comes in. Tajuddin Abbas, and I believe a former member of the House of Representatives, raised alarm about the oversight functions of the National Assembly. They just seem to approve everything that is put on their desk. That's why some have called them a rubber stamp assembly. Do you expect greater scrutiny from members of from our legislators?
Not really. I mean, they haven't shown a lot of backbone in terms of oversight of spending. He took back his statement, didn't he? That just tells you what you need to know. The problem was that when we had the regime, Buhari's regime, where we printed about 22 trillion from ways and means, and we added that 22 trillion to the national debt, that really ballooned the national debt, and you really can't tell what that money was used for. So right now, again, when the new president came in, he borrowed again 7 trillion from ways and means. We're also borrowing again from the World Bank, and we're also going to the commercial guys to borrow. The president has said no more local borrowings, which I presume to mean we're going to borrow more externally, right, in dollars. You saw the plan, 22 billion that they want to borrow about $22 billion. The problem is that if you borrow in dollars, you have to earn dollars to pay back. You can't print dollars. And you need the National Assembly to ask very, very critical questions. How are we going to repay? We're paying from oil revenues. But if oil revenues could fall to price goes to 40 or 50, how do we repay? So those questions have to be asked. You have to have a clear debt plan on what are your plan A, plan B, in case oil revenues are not coming. How do we pay back? So we don't go into another debt trap that we had in the 1990s. That's just the fear. If you don't control, politicians want to spend because that's how they meet their promises. But that spending has got to be funded from taxes or from borrowings. And you've got to be very careful that you're not asking politicians to stop themselves from spending. That's never going to happen.
So now that we know that Nigerians should expect more borrowings, if you put it that way, I stand to be correct. I mean, you're here. Bottom line, should we expect more borrowings, foreign borrowings, foreign aid, since we said there's no more local borrowings? The president has said that. And if we're expecting foreign borrowings, I mean, in your capacity, what would you advise is the best way to ensure that we can monitor these borrowings?
Yeah, the first answer is yes, expect more foreign borrowings. We already saw the plan of between 2 billion we want to borrow. So that's going to go up. The plan is to borrow revenue-based borrowing, right? If we are borrowing tied to a project that's going to generate revenues. So that way you can borrow $100 million, but it's going to go to a project that's going to pay back. So that project is going to be self-funded. Don't borrow in dollars to give to poor people. It's a good idea, but you are borrowing in dollars to convert to naira to do a social service. That's not going to be paid back in dollars. So you already have a debt overhang there, an exchange risk over there. We've got to borrow a bit smarter and tie the dollar borrowings to projects that are going to generate revenues to pay back that dollar borrowing. Then we can go back to naira borrowings for those social projects and hopefully try to increase the revenues from taxes to cover those non-income generating activities. You can't really borrow. The problem is the cost of paying back the debt. Euro bonds are nearly $500 million that when we do a servicing for just this quarter. So if you keep on paying your foreign exchange out as debt servicing, you have very, very little to defend your naira, to grow productivity, to build infrastructure. So that cost of the debt is my fear. And we're borrowing again in a foreign currency, which means you can't print it. You've got to earn it from exporting crude oil. So we're cutting ourselves into a very, very tight corner. If anything goes wrong, we're going to be in a bit of a pot of butter.
Now, Kalu, sorry, I have to bring back the Grand Ethiopian Renaissance Dam project that was just commissioned by the Ethiopians. Massive project, 13 years, and they did it. The most impressive part of it is they built Africa's largest hydroelectric dam without borrowing a single dollar, without any foreign loan. They sourced finances locally, they sold bonds. Are we too quick to look outside to borrowing? Are there other ways we can address, we can build infrastructure without borrowing? And also, ordinary Nigerians watching would be wondering, I mean, didn't the president just say we've met our revenue target? Every other day, customs is declaring record-breaking income that they've made or exceeded targets. So where is all this money going to?
Yes, so go back to the Ethiopians. They were able to, you see the dam, the clearing, the cementing, the site works, right? They did a lot of local borrowing. So they issued the Renaissance bond, and the Ethiopians abroad, the Ethiopians in Ethiopia invested in those bonds, and they were able to use the funds to pay for a large part of the bonds. But when they had to then buy turbines, yes, they had to go borrow from the Chinese Exim Bank, but they did a large part by borrowing locally. The same thing we do here with our federal government bonds. They did the same thing. They issued bonds and they borrowed. Nigeria has also started to borrow in US dollars. We now have Nigerian dollar bonds, right? Not just Euro bonds, but Nigerian dollar bonds that we issued locally that are in dollars. Again, the problem is the cost of that dollar bond. So if you go to America and you put money in the bank, you're getting 1% to 4% in terms of interest. In Nigeria, you're going to get almost 8 or 9%. It's a bit too high. So if Nigerians can invest in dollar bonds and we can pay them 2-3%, because it's an impact bond, it's quote-unquote patriotism, we can drop the cost of borrowing and then we can do infrastructure. That's why the trust deficit is such a big problem. The Ethiopians were able to invest in an Ethiopian project. The diaspora sent in money to Ethiopia in dollars to invest in Renaissance bonds. But in Nigeria, can we also do that? That's why the trust deficit is very, very important.
Absolutely.
If people trust you, they can invest in you.
Now, if you could give the National Assembly a 3-point checklist before approving any new loan, what would it be?
Yeah, number one, is it going to create jobs? Jobs are very, very important. Is it going to create jobs? Because once you create jobs, you're creating consumption, you're addressing poverty. So you're trying to kill two birds with one stone. Will that project create jobs? Number two, how are you going to pay it back? Is it going to be tied to a project? Is it just going to be tied to the budget itself? That's the second one. And number three, oversight. Like, who is in charge of this project? You know, is it going to be a House member? Is it going to be a minister? Who is just going to be in charge? And we're going to say, we've given you these funds, and you're going to run that project management through, and you're going to get the funding. If we do those three, we do a lot. You know, job creation, consumption. That's the biggest problem right now. There's lots of construction going on, but people don't have a job. So if we can tie those borrowings to create jobs locally, at least we get something out of it. So that's the street answer. Any project that comes before the National Assembly, ask how many jobs will be created, organic jobs will be created. Just ask. Number two, is it going to be revenue based? How are we going to pay for this borrowing? Are we going to sell more oil? Are we going to increase taxes to pay for the borrowing? And of course, number three, who is the project manager? If the president leaves office in 8 years, will the project stop, or is there going to be someone that's going to continue this project till the conclusion? That's what we want to find out here.
Very, very interesting highlights there, especially I'm hoping that the lawmakers will look deep into this. Just as some have said, that is basically a rubber stamp where approvals are being made without looking into this properly. But, I mean, before you go, one last question. The CBN has also looked at ensuring that they provide other means to help reduce the burden on Nigerians. Yesterday, I did see a report where the president had given FEC, the Federal Executive Council, a target to ensure that they bring food prices down. In your way, yeah, that was yesterday evening, and they said, the president said, ensure that all food prices are down so that Nigerians can have enough to eat.
It's a command.
It's a command. It's looking like a command now. But as economists, I know you've also touched on the increase in food pricing and how Nigerians are finding it very difficult to ensure that they can keep their body and soul together when it comes to food. What other ways do you think the president, in making that statement, can actually enact or make it happen, rather? What other ways do you think he can make it happen, especially
beyond making a pronouncement? Yeah.
Well, they've got to do the action. There's already a plan. You know, in Nigeria, the biggest problem in Nigeria is the cost of food. High food costs drive inflation. Nigeria's a food story. If you can bring the cost of food down by 50%, you drop inflation. Inflation goes down. The cost of borrowing SMEs go down. SMEs can employ more people. We can have consumption restarting. So simply saying, if you can bring the cost of food down, you can reflate the Nigerian economy. There's already a plan to allow food import on a very, very short-term basis. That's why you see inflation coming down a bit, because we're importing food into the country. So should we do more of that? It's going to affect local farmers, but we need to bring the cost of food down considerably. Not just what we're doing today. The bag of rice has got to be about 25,000 or so. And you only achieve this with imports. When you import, your foreign reserves are going to fall. But if you can bring down inflation in the short term, and you can address the insecurity where the food is grown, then you are now going to revive the economy. Food is an insecurity problem today, not just a monetary problem today. So when the president says, bring down the cost of food, he's saying you got to go to where the bandits, where the insurgency is, and you got to take those guys out. Yobe, just 80 buried. That's where the food comes from. Benue, Yobe, Kebbi. And there's insecurity there. So local food is expensive and imports are cheaper, but we're spending our foreign reserves. So the long-term plan is to take out the insecurity so food prices can come down from Nigerian farmers. Then the economy gets reflated. Short-term, you've got to import food so that inflation comes down, then we can start to consume again. It's a simple plan, but very difficult to implement. It's not just by saying it, they've got to actually go do it.
That's a good one there. I mean, taking a look at it, it only makes sense if we try to cushion the effects that we have now, and then later on we can revert back to the initial plan. I know I had said that's our last question and then we're wrapping up, but just in 30 seconds, I please accommodate this, my final question. Since we talked about farming and food, I'd like to hear what the impact of GMOs have on the economy, since we're looking at it from the food aspect in terms of food. What impact will it have?
Well, it's cheaper. This is GMO. People talk about GMO, but what cornflakes? What the modified seed you have to grow cassava, to grow rice? We already have a bit of modification. If it's genetically, I'm not a chemist, but there's already modified seeds, enhanced seeds that give you better yields, that are more disease resistant. And that's how you grow food. Malthusian theory, the population is so large, we can't grow food. You've got to have mechanized, hybrid farming to increase the food output. So for a country like Nigeria, if we cannot grow food naturally from the farmers because of insurgency, then clearly GMO is going to come into Nigeria. It's not because it's a better option. It's because it's the only option. If you take out large parts of the middle belt from growing yams and rice, how else do you meet up the yield that Nigerians need? Rice. So how else do you meet it if you don't import? And what's the cheapest import? It's going to be GMO because they want to get a market for it. I prefer natural foods. Our food here is better than a GMO. But in the end, people are going to eat. If people see only GMO and it's cheaper, people will buy it. And it's only cheaper because the local food output has gone down. So the issue is not GMO. The issue is the cost of local food has become so high that GMO now becomes a cheaper option. So we've got to fix that. That's what we have to fix. Not really worried about it, whether it's GMO or not.
Thank you so much for your time and insights, Kalu Aja. Always a pleasure speaking with you. Thank you.
Absolutely. Thank you.
Thank you so much, guys. Have a good one.